Mackenzie, are you aware that Matt and I have a national corn yield bet?
I've heard about this, yes.
All right, Matt. So explain to the people what exactly the bet is.
Well, this spring we had a bet that I said I think I started at like 177, 178, and Joe
Mhm.
worked me down and 176 and a half. I said, I'll take the under. Joe's going to
Mhm.
take the over. And it was based on all this talk of drought, which, clearly it's been a fairly wet drought this year.
Okay, so it's been a wet drought, and you were wrong about the idea that summer was going to be dry. But I'm
Sure.
I'm not totally convinced. I'm not 100% convinced that I win this bet. Like, so we've got the talk out there. You're going to see the yield estimates next week. They're going to be mid 180s, upper 180s. But the crop's not in the bin. There's been some weather anomalies. You've had this really wet July in the state of Iowa in particular and elsewhere. You've had some of these temperatures, overnight lows that have been excessively, extremely warm in some areas
Yeah.
of the country. Like, don't you think that there's at least a chance that you get into this thing and it's just not as good as advertised? Don't you think there's at least a possibility?
I'd say kind of like the Dumb and Dumber movie, like 1 in a million type deal.
I don't think it's
176.
one. No, I don't think you're off. I don't think it's that bad.
Here's the thing, Joe. I think you're right. There's a lot of different issues. One of the things that really pops up to me is I've had a lot of guys and gals tell me, "Hey, I don't know about fungicide. At $40 an acre is tough to do at $4 corn." Hey, I totally get that argument. The problem is that the environment we've been in with excessive moisture makes some of these things like tar spot, anthracnose, southern rust. It just runs rampant. And so you could take a field that you thought was going to be 260 and take it down to 180 pretty quick,
Yeah.
190. I mean, I've heard of guys 70, 80 bushel drops. So I'm not going to say 1 in a million. I just think that you're looking at a 180 type yield right now, worst case, unless the excessive heat at night really took the shine off of things. I'm looking at myself locally, and we had an extremely dry June. And to be honest with you, I think that was better than some of the people that were wet all summer,
Yeah.
because I have heard a lot of people say they've had too much moisture. And now they're looking at, of course, some N deficiency. And, there's just a whole host of issues that comes whenever you get 10, 15 inches of rain in a month.
I'm not ready to take a victory lap yet. I think the odds are in my favor right now, but
I'm
I'm not.
saving up.
Yeah, I'm not ready to take a victory lap. The reason I took the other side of the bet is because you wanted to make the bet, and I
Yeah.
said, you know what, I'm a sucker for some action. I'll take the other side of the bet, and here we are. The bet was
It's
for a non-specific high quality bottle of bourbon, and we'll determine that later, I
right.
guess.
I won't go cheap on you if you win the bet. But
I don't
yeah, I
know.
would say right now I feel pretty confident you're going to win the bet. But you're not incorrect in that there's a lot of crazy things that can happen
Yeah,
whenever everyone starts saying that that the crop is in the bin, so to speak.
the expectations are sky high.
It's too high in my opinion. I mean, I still think we're probably trading something over a 185,
Yeah,
which is what could go wrong there.
a lot could go wrong. All right. Good morning, guys. It's August 1st. Welcome to New Month. Let's finally get into the show here. Export sales is where we will start today.
Alrighty, so U.S. corn export sales declined last week. Net corn sales were reported at 13 million bushels. The print was down 47% from the previous week and 46% from the prior 4-week average. New crop corn sales, however, easily surpassed expectations at 74 million bushels. Net soybean sales exceeded pre-report expectations at 13 million bushels. The print was up noticeably from the previous week and up 4% from the prior 4-week average. New crop soybean sales were as expected at 16 million bushels. Net wheat sales were reported at 22 million bushels. The print was down 17% from the previous week, but unchanged from the prior 4-week average.
All right, let's run through some charts here. We'll do old crop real quick. So the old crop corn book is the best on record. That this is not fresh news. We've known this now for a couple of weeks, and we've known for a long time. It's been excellent. Old crop soybeans is slightly below average. Wheat sales are actually looking pretty good, but it's early in the marketing year. Now let's look at new crop corn. Third best out of the last 10 years. Excellent week of sales last week. It appears as if we're still competitive versus Brazil, despite the fact that they are past the gut slot of harvest and they're exporting some corn. So why can't the market rally on this, Matt?
I just, we're in this rut where the funds seem to have a really confident tone that this market is not worthy of being invested in. I think a couple of things come to mind. Last year, you had a pretty dry August, and I think that exacerbated them lifting that huge short position maybe a little earlier than what people thought. And then you look this year, and it's very well known that the farmer has less old crop, than what they had, relatively speaking, last year. Now, I think you and I talked the other day that clearly some of these growers had a little more corn than what some areas thought they would. But you look at the commitment of traders, and funds really haven't bought a whole lot of corn. And so, with that being the case, I mean, you talk to originators as well, and they're going to say, hey, new crop sales are just not very good. And I think the funds that have held this short position, they've been very well rewarded for a long time. I think they're just sitting here waiting until the farmer starts puking some corn because they feel like there might be more downside here and they want to be around to see it. And so, yeah, we've had a lot of good demand news. I mean, we're building one heck of a base here, Joe. And I do think that's going to be a feather in our cap moving on down the road. It's just right now, it's not doing much for us.
I think you're right. I think there's two things. I think when it comes to like the data that we're given or data that's being assumed, the trade has its blinders on and they're only focused on the yield number. And they think this yield number in this crop is going to be huge. And that's like the only thing that matters. What you mentioned about the farmer ownership thing is also very important. I think if farmers are really still sitting on old crop and they're only, I've heard numbers as low as like 5 or 10% sold on average new crop. Maybe you got to get through that first slot of harvest and get the farmer, unfortunately, to sell into some low prices. Okay, that's the good news in exports. Let's go to the bad news. The new crop book of soybean sales out of the United States is the worst since the worst since 2005, Matt, because China hasn't bought anything.
Yep.
This is a problem.
Yeah, and China's the customer. I mean, they're the customer, right?
Yes.
And so the problem, of course, whenever they come in and say, hey, we're going to flip flop around here, we've got a truce going. And yeah, I mean, what the trade is looking for is, hey, we've got to deal with China and we've got some specifics as to how this deal is going to go instead of all this, hey, we don't really know what's going to happen here. We don't know. It might be 90 days. Unfortunately, whenever you're talking China, I mean, you and I have said this several times here lately, but we were in a similar predicament a year ago.
Mm-hmm.
It just seems right now that with them buying beans off Argentina, Brazil's obviously still got a lot of beans that they can move to the market. I don't feel as confident that we're going to see them step in on this buying spree we had a year ago without some sort of announcement soon. They sure haven't shown any indications that's going to happen.
Yeah, so you guys can see on this chart, I mean, if you're watching, so that bright green line that's like barely above the white line that's this year, that was last year. So we're not, while we're the worst in 20 years, we're not that far behind where we were last year. And to go back to old crop, I mean, you can see where we ended up. We ended up with an average-ish, I mean, not great program, but it wasn't like a zero program. The soybean thing matters so much because exports are projected to be 40% of the demand base. And, if you're not at least kind of hitting something that's average or slightly below average, I mean, it's going to be tough to make that USDA number.
Yeah, absolutely. And that's frustrating. Part of it is because when you look at that new crop balance sheet and you look at the old crop balance sheet from a fundamental standpoint, you can make the case that the U.S. looks extremely tight and you don't have any wiggle room as far as yield's concerned. But then you have to tip your cap to, hey, what if you take yield down to 50 and a half and then you take 150 million bushels of exports away? I mean, all of a sudden you're basically just washing the thing out. I mean, you could have a off yield and eventually end up at the same carry out that you're at right now. So exports are obviously super important here. And unfortunately, we just don't seem to be able to sell anything right now.
Let's look at a bean chart real quick. So we're into some fresh multi-month lows yesterday. Maybe we made a new low overnight. Is this because the trade thinks the crop is big, because export sales suck, because there's a trade war, or all of the above?
I mean, I guess all of the above. I mean, the thing is, once again, if we were looking at it just from a U.S. standpoint, and if you could hold any sort of, I guess, hope that the USDA is correct for exports, there would be a little more weather premium in this market whenever you're going into the all-important month of August. Now, I would say, some of these forecasts are talking maybe a little bit of a drier bias in August, but at the same time, I mean, we're coming into August with a full soil moisture profile, which means, you can wait on some sort of a rain event, first of all. Second of all, these long range mats have been, I mean, you basically should have taken the other side of them for the last 6 months. And so you don't know what to believe here. But if you would stay dry, there's no doubt that it would put a little bit of, I don't know, a little bit of premium in this market, at least in my opinion, just based on the fact that, once again, the balance sheet's super tight, assuming a 52.5 yield. And I think we're a long ways from 52.5 yield, not only due to people talking about the crop ratings, but you talk to guys. I'm in Iowa here this morning, and I'll tell you what, clearly they've had too much rain in places for the beans. I mean, most of them are saying, hey, corn's in good shape, we're going to be okay. Maybe we took the shine off of it, but beans, I mean, you got some serious issues whenever beans just get deluged with rain every other day. That's not what the bean crop likes. I mean, you've got to give them a chance to breathe, and unfortunately, that's not what they've gotten.
To stick with the export sales theme, let's do flash sales real quick, then we'll do weather.
U.S. exporters sold 4 million bushels of corn to Colombia, 6 million bushels of corn to South Korea, and 5 million bushels of corn to unknown destinations for delivery during the 25-26 marketing year yesterday. Exporters also sold 4 million bushels of hard red winter wheat to Nigeria for delivery during the 25-26 marketing year.
Look at that, a wheat flash sale. You don't see that every day.
Yeah, no, it's rare, but boy, try to get it to rise out of the wheat market.
No. Part of the corn thing, I think maybe the reason the market's not reacting is because USDA's got a pretty high export projection in there. Maybe the trade looks at the corn sales and just says, well, we need this to hit the projection. I mean, maybe that's what it is. Yeah,
I mean, it's possible, but again, at the same time, at a price point that we're at right now, I mean, there's no doubt that you're not going to hurt man.
Yeah.
Yeah.
All right, let's run. Go ahead. Okay.
You're probably right, but good Lord, I've got to think Echo is strong in here.
Matt, your audio's cutting a little bit, but we'll keep rolling. Okay, we've got drought monitor and weather to do.
Alrighty, so another week of scattered rainfall brought further relief to drought-stricken areas across the Corn Belt. Conditions improved in Minnesota, Iowa, Illinois, and Indiana. Only 2.4% of the region is currently experiencing some level of drought, down sharply from 32% at the beginning of the year. The High Plains also received plentiful rainfall, leading to improved drought conditions in North Dakota, South Dakota, Nebraska, and Kansas. Conditions slightly deteriorated down in Oklahoma. When we look at the percentage of U.S. areas experiencing drought, corn country 7%, soybeans 5%, winter wheat 30%, spring wheat 38%, and cattle country 14%.
All right, drought, obviously not the concern. Here's the map I want to look at. We now have a full data set of July precipitation data, and this is the Iowa State Mesonet map. So where it says 1 in that north central part of Iowa, that means that the month of July was the wettest of the last 133 years. So you've had some historically excessive rainfall in a lot of key corn growing areas through a lot of Iowa into parts of Illinois, southern Minnesota. You got northeast Nebraska there. This is why I don't think I can take my victory lap yet, because this concerns me, Matt.
Yeah, I mean, it's certainly concerning. I know that a lot of folks have said that moisture, I guess amounts are very similar to back in 93. If you look back to 93, they were wetter coming into the year than what they were coming into this year. And so they've been able to handle the water just a little bit better as far as flooding is concerned. I mean, in 93, of course, there's a lot of acres that were lost. Bottom ground was just washed out. Hundreds of thousands of acres were affected. Whereas this year, there's no doubt that, in my opinion, you're going to have areas that are on the flat bias. I mean, if it's a field with roll, this weather scenario is probably exactly what you wanted to see. And of course, Iowa's got more roll than in my neck of the woods, but any area that's on a flatter bias, I mean, there's no doubt that you're going to lose a lot of your lower areas, or you're going to lose in. And then, of course, once again, disease pressure. And so I'm hearing a lot of guys this week that are saying, I sprayed fungicide and I've got disease issues running in rampant again. And so guys can have to spray twice. I mean, the unfortunate reality, Joe, is that, if you sprayed once and then you see tar spot coming in, it's just like if you never sprayed. I mean, once you see tar spot, yes, you can go ahead and do something about it and maybe, head it off of the pass at least somewhat, but you're still going to lose yield. And so unfortunate reality is some of these diseases show up, you're going to lose some yield. And so, I don't know that you can take that much yield off, but by all means, there's still potential to dig this crop pretty good.
Hey, tell me what you know about wind damage or lack thereof from the storm earlier this week. I know that there's some damage. I just don't think it's very widespread.
Yeah, I think there's some damage. I mean, I was actually did a video with Eric this week, and he was showing the areas that had over 90-mile-an-hour winds, and then he compared it to the derecho event in 2020, and clearly it wasn't nearly as widespread. There were several areas that had those types of winds, but I don't think that you had near the down corn, broken off corn. It wasn't nearly as widespread. I think northern Iowa, southern Minnesota, that kind of came out of, I believe, north of the Sioux Falls area and kind of dipped down. Certainly some wind damage, but I don't think it was widespread enough for the market to get super excited about it yet. But that doesn't make you feel any better if you were right in the middle of it.
Right. Let's do cattle. Nasty sell-off yesterday.
Yeah, it was a rough day yesterday. The pullback was largely attributed to fund-driven selling. While no live cattle contracts hit their daily limit, several feeder cattle contracts did, triggering an expanded limit down of $12.25 per hundredweight here today. As expected, the sharp drop has raised concerns that the market may have reached its peak. However, similar setbacks have occurred throughout this rally, with markets consistently recovering and climbing higher. Despite the decline, long-term fundamentals remain solid, supported by historically low cattle supplies and strong consumer demand for beef.
Here's the October live cattle chart. Nasty down day, not a reversal, but a nasty down day. We've had days like this before. This one is especially ugly. This was a downside reversal of some sort in the September feeder cattle contract. I wouldn't call it a key reversal by the textbook definition because we did not open above the prior day's high. But in any case, that's a nasty action. What are your thoughts, Matt? Just a pullback?
Yeah, I mean, you'd have to say it's a pullback if you're looking at previous the ways that this market has traded over the last several weeks and months. As Kenzie said, there's no doubt that from a fundamental standpoint, it's still an extremely strong market. I mean, there's people posting stuff on Twitter this week. I believe someone posted some Charolais steers at like 687. Of course, they were really lightweight steers, but for crying out loud, it's super concerning to me if I'm on the buy side of that thing, and especially if I look over and see live cattle potentially looking like they're topping somewhat. But at the same time, you look at cash prices, whether you're talking fats, whether you're talking feeders, and in the reality of the world, I mean, right now, you just don't see a whole lot of relief there. So I don't know. I mean, your tariff in Brazil, you're probably not going to see a lot of cattle out of Mexico. I mean, supplies, in my opinion, are still going to be extremely tight. And so as long as the consumer doesn't back away from the table, so to speak, I've got to think that you're going to still have strong demand. But last thing I'll say is that you're going to be exiting grilling season here one of these days, and some of that excessive demand that we see in the summertime, if it starts to back off and maybe the economy cools a little, I'd be a little bit nervous.
What about beef demand? Are we concerned about beef demand? Is that a potential catalyst for additional downside?
I mean, in all honesty, it's been super resilient. I mean, yes, I would be concerned about it. If someone's going to go to the store and buy a steak for a price that is similar to what they used to pay at the store or at the restaurant, I mean, golly, it's something that's got to get into some people's heads. There's no doubt. At the same time, if you want a steak, I mean, history has shown that you're going to probably go buy a steak. And so, where I came last night, I went and sat down and ordered a steak. And I mean, it was not anything super fancy, but $50 for a steak. And but I wanted a steak, so that's what I got. And I think that until the consumer gets to the point where it's really pinching their pocketbook, I don't know. Demand right now seems to me to be pretty strong.
I think the consumer is just used to everything being outrageously expensive. I mean, like the average new car payment's over $1,000 a month now. Everybody's walking around with a new $1,500 phone in their pocket every single year. I just don't know that it's like, I don't know that people are viewing it the way that the market's viewing it.
I agree with you.
Mackenzie, there's still no evidence of herd rebuilding. That's what we talked about earlier in the week.
Right. Yeah. No one. I mean, maybe slightly, maybe marginally, but not to the point where we're going to see our herd numbers build back up over the next few years. It'll be at least, I would say, 2 or 3 years before we see substantial herd rebuilding.
And there's no news out of Mexico with the screwworm thing. It's still borders locked down, nothing coming in.
I have not heard anything more. Have you, Matt?
No, I haven't. It doesn't seem like there's any movement there. The only thing I would say with herd rebuilding, and Kenzie knows this better than I do, but the only thing is that you're surely going to see some herd rebuilding just simply due to the fact that you've gotten some moisture
Right.
in areas. So Now you have the opportunity, and there will be, and what I would say is some old timers, if you will, that say, hey, got a little money in my pocketbook. I mean, I got the pasture to support these gals. Maybe I'll go ahead and latch on to a few of them. So I think you'll see some slight rebuilding, but at the same time, you're still getting more money for one of these young heifers than what you've ever gotten in your career. And so calving out heifers sucks. I mean, let's just face it. And so if someone's going to be dumb enough to give you that kind of money for one, why not take it? And so I think it'll be a little slow, but I do think you're going to start seeing some rebuilding.
US dollar had a big month in July.
Sure did. The currency gained roughly 5% during the month, notching its largest monthly increase since December 2024. A resilient U.S. economy and a hawkish Federal Reserve, which held interest rates steady earlier this week, have fueled the rally. Easing trade uncertainty has also supported the greenback as the U.S. has finalized trade agreements with several key trading partners. However, ongoing tension between the Fed's cautious stance and White House pressure for lower rates adds a layer of volatility. Additionally, some analysts warn that recently announced tariffs could eventually weigh on the dollar.
I believe that actually was an upside key reversal on the monthly US dollar index chart. Matt, this thing did nothing but move lower the first part of the year, and I don't know that it helped our grain markets at all. So are we supposed to now believe that this is bearish? I don't know that it matters, but it hasn't seemed to matter.
It sure hasn't seemed to matter, but if it would ever matter, it's going to be on the way up and on the way down, just the way that these things have gone over the last several months. I mean, you look at it, I feel like whenever I've been watching this, especially here in the last week or two, that the wheat market seems to be affected more by the dollar than the corn. Bean market. I don't, maybe it's in my head, but it sure seems to me that up days this wheat market's been taken on the chin a little bit more than corn and beans. But I've never tried to fashion myself as knowing someone who knows how to trade the wheat market, but it sure seems to me like it's been more affected. But I'm like you, I don't know that it matters as much as what we've thought before.
You find somebody that knows how to trade the wheat market and shoot me their contact info. All right. Outside markets this morning, we've got some movement. The Dow's off 470, S&P's down 70 points. Treasuries are off, US dollars higher again. Crude oil's off 45 cents in the September WTI 68.81. Matt, have a great weekend, guys. Have a great weekend. Matt, safe travels. See you guys later.